There it is. Sorry, my machine upgraded to Windows 11. So I guess I got to reset everything. All right, so anyways, here I am. Yada, 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 yada. Good morning. Welcome to Forex.Today, the YouTube channel of more than 19,000 foreign exchange traders. Today we'll conduct technical and fundamental analysis with the overriding goal of putting together trade plans. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. My name is Wayne McDonell. I will be your guide on this journey we call Forex. So again, you can ask about technical analysis, fundamental analysis, trader psychology. I've been trading Forex for almost 20 years. I have a formal education in macroeconomics and financial management. If that's not impressive enough, I used to work for NASA. Yeah. Okay. You don't have to be a rocket surgeon to do Forex, but it never hurts. So ask questions, get involved. I will do my best to serve. You are the boss. I am a servant. So I'll make some recommendations on how you go about your daily business of conducting technical and fundamental analysis. Also recommend that you visit Tradersway.com and open up an account. Why? Well, the execution speed is fast, the spreads are narrow, the swaps are big, and I believe they're trustworthy because they've earned my loyalty and respect. Simple enough. So perhaps you can develop a relationship with them as well, and maybe they'll earn your loyalty and respect. But I can tell you from having worked with them for 8 years now, that they want you to succeed. They want you to learn the skills to be a patient and disciplined and conservative, consistent trader that hopefully can be a Forex trader for years and years and years and years. Now think about that logic. If that good business sense and ethics sounds good to you or makes sense to you, then give them a shot. Because I bet, I'll tell you what, that's a way different thinking and approach to the brokerage business of Forex than almost every other broker on the planet. So anyways, maybe that appeals to you. Maybe it should appeal to you. All right. Coolio. So let me end this poll and let's see what's on your mind. Boom. All right. Most want dollar pairs. Not many people interested in commodities. Not very many people interested in cryptos. That always surprises me. Okay. And then Japanese yen pairs. Cool. Now, the interesting thing to reverse engineer this, those that are interested in trading cryptos are becoming more and more interested in the fundamentals of currencies. So it's interesting. You might be missing the boat. 97% of you are not really interested in cryptos right now, or at least it's not a prime concern. But the interesting thing is those that do have cryptos as a prime concern are becoming more and more like Forex traders. They wake up in the morning and they wonder what the central banks are doing. Interesting. Huh? Interesting, right? All right. So anyways, here we are. Here he is. Yen strong. Dollar strong. Aussie's up. Okay. So yesterday in the day trading group during the Asian session, we watched the Aussie Jobs Report. And I told everybody as I was leaving, I'm like, hey man, Aussie dollar and Aussie yen are up like 75 pips. I said, hey, my experience is it comes down after Aussie Jobs. Said, I've been doing this for a long time, but my experience is it goes up and then it comes right back. So it went up 75 pips and then I bought it when it was down 40 from the top. And even though it's not a good trade because dollar's actually a little bit stronger, stabilized over the last few hours, well, it's not, it's not much different from where I bought it. So, but other things have moved. So I don't know, a little bit luckier, a little bit smart, not really sure. Did you guys notice NASDAQ is down 10% from the November high? Cool. Called it, nailed it. Wonder what the doctor said. Yeah, you know what? It was just nurses because it was just blood tests, so they didn't ask me if anything changed. They didn't say, "Hey, has anything in your health condition changed? Has this changed?" They didn't weigh me. It was kind of sad. They walk in, they're like, "What's your name? Do you have your insurance card?" And then sit over there. And then it's time to go into, get the job done. And they walk in, and again, they want to talk about money and insurance. She said to me, and I swear to you, it's $14. I'm like, okay. Well, it's $14, but your insurance might cover it. Yeah, okay. Well, it could be $2, it could be $5, it could be $14. It really depends. Yeah, okay. Well, it could take a month before you find out. Like, look, I'm good with the 14. Can we get down? Like, come on, let's get on with this, right? So anyways, what pairs have more volatility in the New York session? I think what you mean is range, right? So probably, pound dollar, for example, is a big one, and then pound yen would be a big one. Okay. But think of it this way. In the American session, the American currency moves a lot. In the European session, the European currencies move a lot. And in the Asian session, the Asian currencies tend to move a lot. Okay. So and you're like, well, that totally makes sense. Yeah. Okay. The Russian central bank decided to ban crypto. Sure. Maybe that's why you need crypto. It's probably the best thing ever. That's what crypto guys want. An overreaching, government. Do you guys remember when, getting an Uber at the airport was almost a criminal activity? And you had to hide behind, dumpsters and then jump out and grab your Uber and get the hell out of there because the government made it illegal because they wanted you to use cabs. It's kind of like that. You're only going to make it more necessary. Okay. Yeah, just print more, right? Print more money. Well, again, one more thing on the crypto. Our response to COVID was ridiculous, but in the beginning, I think necessary. Slashed interest rates to zero. For a minute there, we considered negative interest rates. Europe went negative. Japan went negative. A whole bunch of places went negative. And then Americans said, no, it doesn't make sense. We're not going to go negative, but we cut to zero. And we did quantitative easing. And the Trump administration sent out, I think it was $900 million. Cool. All right. That makes sense to me. And then we did another trillion or something. And then we got rid of the government. We put in a new government. And then they put in trillions more. And then at some point, dude, it was ridiculously too much. Ridiculous. Like exorbitant too much. And when you think money is free, bigger's better. I was in Dubai, 15 years ago, and they had this saying, if one would do, build 10. It was great, right? Like we were talking about buildings, right? Yeah. So anyways, that falls right into the hands of why people are interested in cryptocurrencies. The original white papers had to do with that, where they blame the central bank, but I don't think the central bank was the problem. I believe the central government was the problem in this case. Okay? Okay. So anyways, interesting. And that creates a need for cryptocurrencies, right? But another pressure on the on fiat money in general. The interesting thing is cryptos rely heavily on the US dollar, so maybe it becomes symbiotic, but only time will tell. Jumbo. What's up, Sean? All right. So up, down, up, sideways, down, up, up, up. Okay. So how do you read these tea leaves? Well, the first thing I notice is CAD and Aussie are up, both commodity plays, different sides of the world. Now, I put a neutral call on CAD yesterday. Okay, and that had to do with WTI and Brent hitting monthly targets. Peccary says, here, a cab driver might punch you in the face if he even suspects that you ordered an Uber. Well, Americans carry guns, as you know, Peccary. Americans carry guns. So if you get punched in the face by a cab driver, you just pull out your gun. All right. All right. So anyways, sort of neutral here, sort of a little bit of risk off, a little bit of neutral, a little bit of a lot of different things. So we're kind of caught. Okay. Yeah. Now, I think it was you, wasn't it, Peccary? Yesterday, you're like, you were afraid to like come to America, walk down the street because of the violence. So I'm just playing off of that. Now, I would invite you to my neighborhood, except we don't like strangers, like people. So I made a mistake a month and a half ago, maybe. Some people showed up. They parked on my street. They were from out of county because in Georgia, they put the county. And I called the cops on them. I'm like, I don't know you. I've never seen you at my neighbor's house before. All this kind of stuff. Like, I called the cops. No joke. Told like strangers. Turned out it was my neighbor's guests. Well, I don't know. I don't know you. And if I don't know you, I don't like you. Yeah. Yeah, no joke. It's kind of like that. Also, you're not allowed to park on the street in my neighborhood. Isn't that funny? In California, there's cars everywhere. You walk down the street, all the houses are $2 million each. And there's 4 cars in every driveway. There's, car after car after car all down the street. It's so narrow. It's like there's only enough room for a horse to get down your street because there's so many damn cars. Because even though every house is at least $2 million in California, everybody is pathetically poor. Because they have to spend, think of it, a $2 million house is $10,000 a month mortgage for 30 years. So everybody's poor. You come to my neighborhood, you're not even allowed to park on the street. So, and if you park on the street, dude, someone's going to call the cops. That's that. All right. So anyways, Piggy I like. So I got all these lines in the sand. I did this last night. Here's yesterday's trade plan. And the trouble with this trade plan, as beautiful it is, Okay. Okay. As beautiful this is we have this 4-hour 21 in your face. So we know as a bear, you see this drop part of the up plan? That's where a bear would sell. So that green candle, I think, is kind of where we were last night, where I'm like, bears would have sold 4 hours before our plan, right? So now all this time's gone by, 12 hours has gone by, and it hasn't gone down. So it may be just at that moment in time of the up coming together. Now, I don't want to go into this entire trade plan because it looks at February and all that kind of stuff. If you want detailed trade plans, you probably should join FX Bootcamp. Okay? Did you know you could meet with me in the Asian session, meet with Ryan in the European session, and of course, I'm here every day for you in the New York session? That's only $200 a month at FX Bootcamp. And that gives you the swing trading group, which I'm doing tonight. And that gets you all the training videos, which is 65 hours. All of that. $199 a month. It's not that expensive. Okay. So anyways, up. It's kind of interesting, right? Up. Up. Okay. My target would be like 139 or 140, depending on how confident you are in that. Let's skip Euro and look at Aussie. And the way we're kind of playing this in boot camp in the day trading group was like recovery, but then no reason to really buy it fundamentally. Okay. And that's what this is all about. And then you get this big bold move and then 100% retracement. And then, okay. So we're basically trading this like a range. And that's that. Okay. So long off the central, if you're an aggressive bull on a mediocre pair. See, this pair is quite mediocre. Aussie's generally weak and dollar should be weak. So there's more of an argument of sell it off the top than buy it off the bottom, but whatever. Sometimes you just take the shot because you're open. Okay. Now, one of the other things we have going on here is here's the bottom formed. As you can see, it's almost an inverse head and shoulders. It's not really, but it kind of is. Okay. If you want to look at it that way. But the most telling sign here is this is resistance. We broke resistance. Okay. So if we were doing a 1, 2, 3 pattern, which is one of my favorite, if not the favorite pattern is usually 1 is a double bottom. Usually. So you can call this triple bottom, inverse head and shoulders, whatever. It's all the form of the same thing. The bottom is, a form of a reversal pattern. Okay. 2 is the alert. Shields up. Okay. Get ready. RWA on the higher high. You're still not in. Double bottom, triple bottom, whatever, just confirms it's a bottom. And by the way, not at a random price, at something understandable. And that's what this is. This is the monthly pivot. Okay. Something that you could reasonably predict it would happen so that you're watching for it to happen when you get to that price. And then when you see it happen, you take note. You still don't trade, but you're like, oh, I see what's going on here. Now, if you're Johnny, you take the shot anyways because Johnny's on the spot. Johnny's long there. Anyways, so I noticed number 2. Okay, so the first one, let's call that 1. Let's call this 2. Okay, now the 3 is this. Higher, low. Or it could be a roll reversal. Same kind of thing, right? A role reversal is you go na 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 na. Okay? That's one way of doing it. Okay? Another way, you could use the daily pivots, which is there, or you can use the moving averages, which are there. Either way, done. Okay? Great. And there we are. That's yesterday's trade plan. Nice. So what's tomorrow's trade plan? You ready for this? Okay. Okay, that's it. The question is, really the more difficult question is, when do you take profit? And one answer could be the June Fed meeting. Sean says, hey, the RBA said they would not raise interest rates. But how about good employment numbers and inflation? Won't that change their tone? We already know we already know. They've already addressed this. Like very specifically. I listened to him say it. I watched his posture. Okay? So we actually discussed this. Can't remember if it was a swing trading group or the day trading group, but we discussed it. And so this is something that we know specifically. Okay. Governor Lowe said, okay, wage growth must start with a 3. Set. They believe inflation's transitory unless wage growth starts with a 3. That's it. So I don't have to debate anymore. I don't have to debate about it. I know exactly what they're looking at. I know exactly what they're looking for. I know the exact variable. So watch that wage growth. Does it even start with a 2? I don't think so. Maybe it does now. But we'll have to pay attention. See, if you're an economist, if you have inflation not backed by wage growth, then it's something, I was going to say something different, it's something else. Well, you're like, well, yeah, if it's not wage growth, then it's something else. Well, what I mean is there's different types of inflation. There's inflation because everybody's rich, or there's inflation because there's scarcity. See, economics is the science of scarcity. It's pretty interesting, actually. But when a resource is scarce, like a flawless diamond, its value goes up. There's not many flawless diamonds. Okay? It's not, so it's sort of like that. Okay, if you go to Venezuela and you want to buy disposable diapers, they're very expensive because there's not many of them available. Might cost you 3 months' salary. Okay? So anyways, if Australia sees inflation, but it's not with wage growth, then it's something else. And then whatever the central bank does will not impact it. Cutting interest rates or raising interest rates will not impact the supply chain. Okay, you see that? So in the United States, we have inflation because of supply chain, but also we pumped $10 trillion into the economy. Gross negligence, right? But remember, up until COVID, there was no consequence to spending money. We did quantitative easing 1, 2, 3, and 4 back in response to the economic situation of 2007, 2008, which was a global financial crisis. And we spent more money there than any time in the history of America. And it had no impact on inflation. Which is a dangerous sign, because then this time around they're like, well, there's no consequence to printing money. Well, we did the last time around, the central bank created money and then destroyed the money. That's why there was no negative consequence. Okay? The Obama administration did nothing to address the financial crisis, except cash for clunkers. But I think even that was George W. So the central government did absolutely nothing. Only the central bank saved us. They bailed out the banks. They bailed out AIG. They bailed out Fannie Mae and Freddie Mac. They bailed out the car industry. They bailed out a whole bunch. Okay? Okay? But that goes to I. Okay? C plus I plus G, okay, is the basics for a closed economy. So that goes to I. They created money that goes to I, and then slowly over 10 years destroyed that money. Now, this time around, okay, the central bank created money, not printed money, created money. But they didn't, they just put it to work. There wasn't bailouts of entire industries. But then the government came along. See, the central bank creates money. The central government prints money. And what they did is they gave money to people for free, and that went here to consumption. And that's what created inflation. And then they printed more. And then they said we should have some investment. So they put a tiny bit here. But then they want to do more. More and more free money for everybody. And it's bad. That's bad. Okay. So we can see the difference here. The central bank went to ridiculous levels 10 years ago to stabilize our economy in a global financial crisis that nearly took us into depression. And 10 years after the fact, there was no inflation. Full employment, no inflation. And then within a year of the central government printing money and giving it out with no productivity attached to it, it can't be an investment if there's no productivity. Well, within 1 year, we had super high inflation. Now, I want you to think about it, and then I'm going to move on. We haven't had inflation in the United States for 40 years. And we created out-of-control inflation in just 1 year. And that was a negligent government, not the central bank. I don't blame the Fed at all. Cool. All right. So anyways, Aussie's up. So I wanted to talk about this. The target here, your daily target is coming up here. Your weekly target is here. Your monthly target is here. And there's one more target. Okay. Target number 4 is equal to the June Fed meeting. Not price-based, but time-based. Exit as we approach that. Okay. So we're already on the conservative target for the day. The aggressive target is a little higher. See, bullish profit zone aggressive, 72.69. Just kind of looking around. I'm sort of, right? So those two trades are working out. Brent is topped out. Let's just get off dollar pairs. Let's do commodities because this matters. Okay. We talked about this last night. So if you're not watching this, for shame on you. But this is at least a pause. Now, you might argue that Brent's going to continue going up, and if you did, you'd be playing it like this, right? Nonetheless, there's a pause there, and the risk now is this, which would lead to this. What's going to happen? I don't know. Darko says, hey, well, what about if China doesn't want to see a strong Aussie? China is worried about China. Okay, they cut interest rates and now, right, and they've cut the RRR. And I believe there's going to be some other liquidity provisions and stimulants to the economy. So China is worried about China right now. The numbers are not great, and it's time for the central bank to step in, worry about the real estate development industry, which is now impacting China's ability to attract U.S. dollars. They also have the Winter Olympics and all that kind of stuff. They don't want to be embarrassed and all that kind of stuff. So, going back to your point, Darko, China's worried about China. Okay. Jeff, the link is in the description below. So, when this happens, I want to buy the Australian dollar. Well, what's RRR, right? The reserve requirement ratio states that if you, well, first of all, what is it? Okay, you have a central bank. Okay, central bank. And then you have okay, commercial banks. These are skyscrapers. Okay. And we'll call that, we'll just say bank, commercial bank, whatever, bank. Okay? Bank A, Bank B, Bank C. Okay, now each bank attracts depositors, and I'll just say, let's pretend 10% is the RRR. Let me put it up here. Okay, the reserve requirement ratio is 10%, let's say, which means someone deposits $1,000 in Bank A. Bank A, at the end of the day, takes that money and parks $100 at the central bank, 10% of 1,000. So now this bank has $900 available to loan in the form of mortgages or car loans or student loans or whatever loans, business loans, or they can buy things like bonds. Okay, cool. So the issue here is if China, let's say, cut the reserve requirement ratio from 10% to 5%, what that means is there's only $50 now at the central bank and $950 available to loan out. Now you're like, well, what's the big deal? Well, there's also something called the Money Multiplier, which is part of the Fractional Reserve Banking System, which means eventually, as this trickles slowly through the economy, $500 worth of investment would have been created. Okay? And you're like, well, how does that work? Well, the money multiplier formula is 1 over R plus E. Okay, so maybe I'll erase some of this. Oops. 1 over R plus E. So you can do the math here. 1 over the reserve requirement ratio, 0.1. Okay, required reserves plus excess reserves. Okay. Okay. Or what versus 1 over 0.05 plus E. You're like, well, what's the E? Well, the bank is allowed to keep more money at the central bank if it wants. And it used to, but right now probably not. So really it's 1 over R. Okay. So let's take a look at that. One divided by 0.1 is equal to 10. So remember how that $50 that was given back to banks to invest turned into $500 in economic activity inside the economy? That's the money multiplier. Okay? So if the central bank now changed their reserve requirement ratio so it was 1 over 0.05, it's 20. So that 50 doesn't turn into 500. That 50 turns into 1,000, right? Times the 50 that was given back for loans. $50 turns into $1,000. Now that's a pretty good return, isn't it? Well, this is why rich countries get rich and poor countries stay poor. So in a rich country, every time a bank has $50 to invest, they put that $50 into the economy. And it produces a $1,000 return. It's like to say like that is it. The money becomes productive. I want you to think about that. Productivity is key, whether it's you doing your job or money doing its job. When it's invested, it's put to work and it becomes productive, and productivity creates excess. Okay? So in this case, over time, $50 is turned into $1,000 in a rich country. Now, $50 put in a tin can and hidden in the cupboards is not productive. It sits there, and 10 years later, it's still $50, but probably is less than $50 in purchasing power because of things like inflation. No productivity. It's kind of interesting. So I want to bring this back, make sure you understand. The central bank, right? The People's Bank of China, the PBOC, has cut the reserve requirement ratio multiple times recently. And by the way, I called it before it even started. Everybody at FX Bootcamp knew this, and I believe I've called it here multiple times. It's coming, it's coming, it's coming. So that means more money is being put toward productivity. Isn't that what the central bank wants? If the economy is slowing down, they want to create more productivity. Giving people money for free creates no productivity. What happens? Two things happen. Consumption goes up for a while, but then the people who got the free money don't have the money anymore, and we're right back to where we were, except now there's a shortage of whatever they bought. So if someone with a job now wants to buy a TV at Walmart, it might cost them $10 more. It's dangerous to give money for free. Okay? Anyways, now they've also cut interest rates. Okay? Which means money is cheaper. Okay, so now there's more money to be put to work. You see, this is at the bank level. It says banks, now you have more money, loan it out. And then you look at people and businesses and it says, hey, not only is there money available for you to borrow and put to work, but the cost of borrowing this money has gone down. It's more affordable. We are actually asking you, successful business people, right? I mean, think of it. Where's this money going to go? Successful businesses, right? Where else is this cheap money going to go? Banks control it through the asymmetric information challenge. Okay? They have more money to lend out, and they choose who to lend the money to. Who do they lend it to? Successful businesses, and who else? I want to see if you get this. Who else gets the money? Okay. Rich and wealthy people. What's the difference? Wealthy people own the successful businesses. Rich people work for the successful businesses owned by wealthy people. Let me tell you the difference. Okay? I have a friend in California. I think he used to make $400,000 a year. He was rich. He owned his own home. Okay? In California, a 2,000 square foot home is multi-millions of dollars. So he lived in a 2,000 square foot house, which he fully renovated. Okay? He worked day and night. Literally, he would work 18 hours a day for about 20 years. Made good money, could go on vacation, own new cars, had a nice E-Class 350, and then he got rid of that and bought a Tesla. Okay? Living the life, rich. But he went to work, and he worked 18 hours a day. And I'm not joking. That's not an exaggeration. Okay? Boom. And he made $400,000 a year. He recently went through an IPO, quit his job, and apparently he has nothing to do but watch Netflix all day. So he still doesn't sleep. So he used to sleep 4 hours a day because he worked all the time, and he would travel, and he'd fly to Israel for a month, and he'd come back to the Silicon Valley, work here for 2 months, and fly back out to Israel to manage his team and all that kind of stuff, right? And now he's at home. Instead of a 2,000 square foot house, he has an 11,000 square foot house and a pool house and a giant pool, lives in a private country club, doesn't have a job, doesn't go to work, still doesn't sleep, and he just watches Netflix all day. He's wealthy. He crossed over from rich to wealthy. Okay? Wealthy people, so now he's going to take all his excess money once he starts thinking about what to do with the rest of his life. He's going to put it into successful businesses, and he'll be a successful business owner. You have to transfer over. Rich people make a lot of money. Wealthy people have a lot of businesses. So if you earn a lot of money, you have good credit, so the bank will lend you money. If you're wealthy, do you have good credit? Yeah, but you have assets. See, rich people don't have any assets. Oh, yeah, they have a vacation home and whatever. They own their own house, but they're rich. A wealthy person doesn't have any money. They just have assets. So you have to convert your money into assets, and that's the name of the game, guys. Because money gets influenced, and money over time will lose value. So rich people have a lot of money. Wealthy people have a lot of assets. And everybody else doesn't get to play the game. You're a factory worker. Okay? My buddy, okay, making $400K a year is a factory worker. Now, he can buy the factory and become a factory owner. It's really important. Now, the funny thing about my friends, these are all my college buddies. I know they're like brothers, right? I know them so well. Right? Just so well. And so many of my friends now are done. Like, they're now 40, but some of them were done when they were 30. Like, more money than God. I don't know about that. I guess my first buddy, I remember we were camping, and I said, hey, man, how's this Google IPO going to go for you? Can you imagine we're camping? When Google interviewed my buddy, this is before the IPO, Google said, make us an offer and we will beat it. Have you ever heard of something like that? No, he happens to be a genius. Who's going to hold that against him, right? But anyways, Google wanted to hire this guy. He had already gone through an IPO because he's smart. So his second IPO was the Google IPO. Anyway, so we asked him, hey, man, how's this Google IPO going to go for you? Because it was going to happen in a week or two. And we're just camping in the Sierra Nevadas, and it was raining on us and all that kind of stuff. And he's like, if it goes to 20, I'm going to be super happy. So anyways, he's got his 100 or 200 million. Not a bad, right? Done. done by the time he was 30. So anyways, fast forward another 20 years and 7 of my friends are independently wealthy, which is just funny. You know, how do you define independently wealthy? One moved to Belgium and bought a castle and lives in it. Another one moved to the south of France. He's not even French. Lives there. He's successful. His wife went through IPOs. Like that kind of stuff. Isn't it funny? Anyways. Anywho. They transitioned from rich to wealthy. All right. Cool. One of the things I'm looking for are longer term trends developing. I need to add a new thing here. Can you guys think of any long-term trends that could last throughout this year? Let's just do Benny. What could last all year? Are you thinking this way, by the way? Are you thinking annual? Okay. This is Bitcoin. Okay. This is Bitcoin. What do you think? Does it have a chance to go all the way up? Or is it the same as gold? How do you handle gold? Okay. The trick here is you will buy a dip. Okay. That's it. Right now we're riding the hourly, so it'll take some time. Okay. Right on, Jeff. It's cool how it works, huh? It's nice. Master says pound pairs versus funding pairs. That makes sense. So you could look at this and that would make this an opportunity for Master Trader, Master T. Okay. This one, no. Look at this. Aussie's actually stronger than pound. And here's the interesting thing. You ready for this? This price for shorting, which you might call a double top, but what the pivot is telling you is this is the target. Cool. Now that we're at a bottom, the next move could be this way. Not that it will, but it could be. Okay. That might be next week's rally. But anyways, all right. What else? So pound Swissy could be an up. Pound dollar could be an up. Okay. And people in the day trading group know this, and I think probably the swing trading. I think it was the swing trading group where I made the plan. But to drive it from 36 way up. Okay. The plan was to buy it at 36 and drive it like way up. Okay. Like minimum 140 kind of thing. Darko says, worst case, Bitcoin could be bearish all year. I think it's more like what the chart says. Remember, I don't have an opinion. I only have a conclusion. The chart tells me down to 37 and then up, 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 up. That's what the chart says anyways. So anyways, pig dog all the way up, maybe, right? Do you like pound Norway? Not a funding currency. So you can change that out to beast. And what does beast say? Okay. It actually doesn't say anything useful. So I'm just in a waiting game on this one. If we were doing, right, what Master Trader is suggesting, pound pairs versus safe havens. So here's a safe haven, Japanese yen. And I believe MT says, hey, pound up because of the central bank activity. Okay. There isn't a good number at the moment. So we're farting around here, 155, 55, 55, 55, 55. Is that the number? I don't know. What's the better number? I still don't have it. I don't know. So you got to wait. The price action has to change on the 4 hour. This says down technically, and the neutral is around 155. Darko says it'll be more up and down. Yeah, for sure. Okay. Jeff's like, wow, you're giving away a lot for $5. It's like 230 files or something, Jeff. Yeah. That's a lot for $5. I could probably charge $8. All right. So anyways, so what's the next line? 55 or 55.50, right? Cool. So let me ask you guys, are you buying the stock market right now? Okay. Now, how many people can confirm that I've told you for at least 6 months that in the early part of January, the stock market was going to come down? How many people heard me say that 20, 30, 40 times? And that I was saving my money to do it? Yeah. Well, you're welcome. Okay. From this top to where we are now, it's more than a 10% drop. So now I'm interested. Pete says at least that many times. Cool. So I might buy some assets with my money. That will reduce my richness and increase my wealthiness. I'm going to convert cash into assets. Yeah, cool. Nice. By the way, this is January 1st to today. You're welcome. Now, how many people heard me talk 3, 4, 5, 6, 7 times about rotation out of growth and into either value or international. How many times have you heard me talk about that recently? Rotation and right? Rotation from rebalancing. So you got rebalance to rotate, and you're going to rotate out of growth, which means out of NASDAQ, and into either value stock, which might be, I don't know, S&P 500 or something, or Russell, or outside the United States. Okay, cool. So in particular, you might notice NASDAQ is down 10%, Dow is not. Why? Well, I'm being very particular. I'm saying something very particular. Rotation out of growth. And NASDAQ is heavy in growth stock. So I'd like to say not only did I call it, I picked the right horse. Yeah. Cool. And according to this report here by Bloomberg, NASDAQ index is poised for the worst start to the year since 2008. Called it, nailed it, 6 months in advance. My eyes were closed, half court, 3 points, nothing but net. You're welcome. So now I got to take the money I saved. Okay, remember, if you save money, you're rich. And then I got to convert my money into assets, which then means I'm wealthy. I don't have any money, though. See, when I buy all these assets and I'm going to sit on it for 20 years, I won't have any money anymore. I will be broke. Okay? I want you to think about that. Okay, what do you need money for? My rent, milk and eggs and bread, put gas in my car. Okay, great. Well, you should have assets that are income producing so that your apartment building buys all that stuff for you. Meanwhile, it goes up in value. And you don't work. Your apartment building works for you. So you got to get there someday, right? Broke. Yeah, absolutely. Okay, absolutely. So anyways, that one's not quite ready yet. Okay, dollar might be. Yen is not quite ready. Okay, why do I have this set the opposite way? Let me show you. This is CAD yen. I want everything else to go up, but what's this all about? Top, 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 and now I'm pointing this down. Why am I thinking that way? That's much more interesting than the call, isn't it? You go over to commodities and you use WTI, and I zoom in here and I zoom in even more, and this is the projected top for West Texas Intermediate crude that we identified 5 weeks ago. So it can go higher, but probably the probability of is greatly diminished. Somebody had limit orders here. Do you understand that? Okay, somebody took profit here. More people took profit here. If someone then shows up and smells the vulnerability, someone's going to start selling, and it'll start producing moves like that. and we'll head down. We'll head down one standard deviation from the mean. Cool. That's so smart. So if that happens, at least on the smaller time frame, kitty cat is going to stall out. Okay. White Rock says, yeah, and get a sweet government tenant for that. Well, I'd be more particular. You might want to invest into a REIT that builds dormitories for state-funded universities and basically collect rent from the university that collects rent from the government. And the cool thing about that is every year you probably have 70% rotation of tenants, which means you, right? So if you get 70% rotation, it means you always get the market price. And prices tend to go up, not down. So what happens is, every year if rents go up in the community by 5%, well, you raise your rent 5%. If you're a commercial, like let's say you build a warehouse for e-commerce, they're red hot right now. And you might collect a good, high rent today because it's in demand for your warehouse, but you're going to sign what? A 15-year loan, a 15-year or 10-year, let's say. You're going to do a 10-year lease. What's the problem with that? Well, you're happy now, but in 10 years, what's the dollar worth? What are comparable rents worth? Okay. What if other comparable rents go up 50% and meanwhile the dollar loses value? And you're stuck in this old lease. It was good on year 1, but on year 8, maybe it's not. Okay. So what was it? 9 months ago, I bought dollar stores. Okay. I bought prisons and rehabilitation, if you prefer. I bought old folks' homes, for example. I bought apartments. Why would I do this a year ago, 9 months ago? Okay. Because inflation pushes up rent, and rent is sticky. Rents go up, they don't go down. So I own 20,000 apartments. Guess what? The rents were going to go up. I knew that as an economist. I didn't know it'd go up this much, but rents are going to go up and they're going to stay up. So all those apartment buildings are now more profitable than they were 5 years ago. And they're going to stay more profitable than 5 years ago. So I'm making money. Cool. What about old folks' homes? The economy slows down. Do you kick grandma out onto the street with her Alzheimer's? No. So that's going to collect, and rents are slowly going to go up as everyone's grandma eventually dies. They have to bring in a new grandma. And guess what? She has to pay more than the old grandma. So I'm going to make money on old folks' homes, and I'm going to make money on apartments. Okay? Jails. Hey, high inflation means if you're poor, everything costs more, but you ain't got no money. Whatever. Okay? What about dollar stores? Inflation. Once again, you got no money? You need to make your dollar stretch, and your dollar doesn't buy as much anymore. So even Walmart's not cheap enough. So you go to the dollar stores. And I did all of that in anticipation of kind of where we are today, but I did it a year ago, 9 months ago. But I got no money. All of this made me money, which is cool. And then about 3 months ago, maybe a little more than that, 4 or 5 months ago, I bought, I wanted to move money to Europe. Okay. So I bought European banks. Why? Because interest rates are going to go up and banks are going to be more profitable. Now, I'm looking 5 to 20 years out. Because I know my money is going to be worth less in 5 to 20 years. So I got to get rid of my money. So I bought some European banks, and I'll buy some more European banks. That's cool. Also bought European. Okay, you see now my rotation. I'm rotating internationally. Okay, I bought European Airlines. Because I figure maybe not this year, but 5 to 20 years from now, people will be traveling on airplanes again. FX Forecasters is referencing a quote. It goes like this. You got no money, you got no car, you got no woman, and there you are. There you go, FX Forecast. Okay. And once again, I'm thinking that far out. And they're not doing well now, but I bet you I'll be profitable 5 years from now. So what's your next move? Because I did that 4 months ago. What's your next move? Oh, I forgot. I did some other things. I bought Chinese ADRs. It's a fund actually. So I bought into the fund and it owns like Alibaba, Tencent. I don't know the stock symbols for these. Tencent. It owns JD. It owns let's say the top 10 Chinese stocks, It actually owns about 25 or 30 of them. But let's say all the big top 10 Chinese stocks you've heard of, it owns. Cool. But I bought this fund when it was down 50%. So I'm thinking Alibaba will be worth more 10 years from now than it is today. What do you guys think? How about this one, FX Forecast? You spot a fine woman sitting in your row. She's dressed in yellow. She says, hello, come sit next to me. You fine fellow. You run over there without a second to lose. And what comes next? You bust a move. I think that's the one you're talking about. Anyway, so what do you think? Is Alibaba going to be worth? No, you're like, what's Alibaba? It's like Google and Amazon and PayPal all in one company, all in China. If Google, Amazon, and PayPal got together and had a Chinese baby, it would be Alibaba. Cool. But I got no money. I'm broke. Is that where you get your ASICs, Darko? Really? Oh. Why is imports greater than exports such a bad thing? It's not a bad thing. Okay, it's misreported, misunderstood by journalist majors that didn't go to business school. If I'm importing a lot, it's because I'm exporting my inflation. Think about it. If I import something, it's because it's cheaper than I could possibly do it myself. So if it's cheaper, it's deflationary. It's one of the reasons America hasn't had inflation for 40 years. Why hasn't America had inflation for 40 years? Well, China had inflation for 40 years. Okay? It went from zero, right, income per person, right, to a country that produces billionaires. 40 years ago, China was mostly peasants. Now it's a place where if you want to make real money, you go to China. Okay? So anyways, that was good for America. That was good for America. So, you know, a lot of people, so I took a class at Harvard specifically on minimum wage and alternatives to the minimum wage. And we studied if you raise the minimum wage and all that kind of stuff, and child tax credits and all these different things. And then we debated and all that kind of stuff. But one argument that came up a lot is, you know, wages haven't gone up for 40 years. And that was something that was quite an argument that was presented over and over and over again. And then I would bring up an argument because I'm a capitalist pig dog. And I'd say, well, 40 years ago, a poor person didn't have a 60-inch 4K TV on their, you know, low-income rental apartment with a PlayStation 4 that has games that are worth $100 each, right? Like, it sucks to be poor. There's no doubt about it. And I grew up poor. I ain't going back. But it's probably better to be poor now than 40 years ago. Universal basic income was another one I studied. And that was kind of interesting because I did study it from Milton Friedman's point of view, but also over his years. And I wrote a paper and I did research. And I did research breaking down like the federal government budget, which is kind of interesting. And I found if you took the entire, because I thought about this. What if we got rid of the U.S. military? I'm not an advocate for that, but I said, what if? And what if I used that money and put it towards UBI, Universal Basic Income? Which means if you don't have a job, you still get money. Okay, great. And I did some research and found out what the annual military budget is. I mean, every tank, every Humvee, every soldier, we just cut everything, fire everybody, sell everything. So next year's military budget is $0. And we take all that money and we put it toward UBI. It wouldn't even get us through a month. Not even a month. Not even a month. It might get us like, if you get paid bi-weekly, right? We'd get one check and by the middle of January be out of money. Interesting, right? Food and total income in Sweden. Yeah, smoked salmon every day, right, Robin? I remember being in Sweden, and I'm like, I remember feeling so smart. I'm at the breakfast table, and there's like turkey meat, carrots, cucumbers. I'm like, what kind of breakfast is this? This is not how American eats, right? Some smoked salmon. All right, great, fine. And then I'm like, oh, apple seed juice. Oh, look at that, apple seed juice. I'm so smart, I can read Swedish. Obviously, it's apple juice. And I pour it out, and it's orange juice. Apple seed juice is orange juice. I'm like, well, what's orange? What's apple juice? Orange seed juice? Anyways. All right, well, I think I'm done. I got to get some trades on. The stock market's probably open, huh? Close? Oh, yeah, probably. It just opened. Yeah, I like caviar, actually. And that's the rye bread, isn't it? Yeah. Oh, I love caviar. Depends on the caviar, though, actually. You got to have good caviar. Anyways, peace on earth. May the pips be with you. May your profits be above average. I will see you today. If you're in my swing trading group, we're going to plan next week. Appelsen. Yeah. Appelsen. Orange. Yeah. I'm like, obviously that's apple juice. Obviously, right? So anyways, peace on earth. May the pips be with you. May your profits be above average. I hope you have the strength and courage to take the information I share with you and do the work that's required to be done. And at first you become rich, and then you become wealthy. Yes, matey, I'll see you at 4 p.m. Have a wonderful day. I invite you to join our swing trading group. It meets once a week to plan next week's trades. Typically, we look for 300 pip trades. Dude, it's only $99 a month. We do a lot of group work. It's not just me preaching. We do a lot of group work. It's a lot of fun. The camaraderie is amazing. You will not find a better community of Forex traders, I'm telling you. People care about each other, honestly. So, fxbootcamp.com. Hurry up. See you later.